Most traders spend years searching for the perfect strategy, convinced that one more indicator, one more pattern, one more piece of knowledge will finally unlock consistency. But the truth that nobody wants to hear is this: the traders who break through almost never do it by changing their strategy. They do it by changing themselves. This is the story of how transformation happens not on the charts, but inside the mind of the trader who's willing to look inward instead of searching outward. There's a moment that happens in every struggling trader's journey, usually late at night after another losing day, where you sit there staring at your screen and you think to yourself, what am I missing? You've studied the patterns, you know the rules, you can explain your edge to anyone who asks, yet somehow when real money is on the line, everything falls apart. Your hands shake before you click the mouse. Your heart races when price moves against you. You close winners too early because you're terrified of watching profit disappear, and you hold losers too long because admitting you're wrong feels like admitting you're a failure. In these quiet moments of brutal honesty, you start to wonder if maybe you're just not cut out for this, if maybe some people have what it takes and others don't, and you're starting to suspect you might be in the second group. But here's what's actually happening in that moment, and why it matters more than you realize. You're standing at the exact threshold where most traders turn back. You're facing the uncomfortable truth that the problem isn't your strategy, it's not your charts, it's not your broker, or your capital, or your luck. The problem is the war happening inside your own mind, and until you're willing to turn around and face that war directly, you'll keep searching for external solutions to an internal problem. This is why traders can watch the same videos, read the same books, learn the same setups, and get completely different results. The strategy was never the differentiating factor. It was always about who could handle the pressure of uncertainty without falling apart. Think about the last time you had a perfect trading day. Everything clicked. You followed your rules. You took your setups with confidence. You managed risk perfectly. Price moved in your favor, and you felt like you'd finally figured it out, like you'd crossed over into that elite group of consistent traders who just get it. Then the next day comes, or maybe the next week, and suddenly that same clarity is gone. You second-guess an entry you would have taken yesterday. You move your stop loss because you're afraid of being stopped out. You take a trade that doesn't fit your plan because you're bored or frustrated or trying to make back what you lost. Nothing changed on the charts, but everything changed inside you, and you can't figure out why. This is the pattern that tortures developing traders. These flashes of brilliance followed by periods of complete confusion. You know you're capable because you've done it before. You've proven to yourself that you can trade well, but you can't seem to sustain it. So you start analyzing what went wrong. Maybe the market changed. Maybe your strategy stopped working. Maybe you need to adjust your rules or find a new approach. You start researching again, watching new content, testing new indicators, and without realizing it, you've just restarted the cycle that's been keeping you stuck for months or years. You've turned away from the real problem and gone back to searching for a better strategy when the strategy you already have would work perfectly fine if you could just execute it consistently. The uncomfortable truth is that most traders already have everything they need to be profitable. They have a framework that makes sense. They understand market structure. They know where to enter and where to exit. They know how to manage risk. The edge exists. What's missing is not knowledge or technique. What's missing is the internal stability to execute that knowledge under pressure without interference. This is what separates the traders who break through from the ones who keep resetting. It's not intelligence. It's not market insight. It's the ability to sit with discomfort without reacting to it. Let me paint you a picture of what this looks like in real terms. You're watching your setup form. Everything aligns. Your rules say take the trade. But there's this voice in your head, quiet at first, then louder. What if this is the one that wipes out your progress? What if you're wrong again? What if price reverses right after you enter like it did last time? These thoughts create a physical sensation in your chest, a tightness, a hesitation. Your finger hovers over the mouse, but you don't click. You tell yourself you're being careful, waiting for more confirmation, being smart. The trade triggers without you and runs exactly as you expected. Now you're angry. You curse yourself for being weak. The next setup comes, and this time you're determined not to hesitate. You enter aggressively, maybe even over-leveraged, trying to make up for what you just missed. This trade goes against you immediately, and you're stopped out. Now you're frustrated and confused. You followed your rules on the second trade, but not the first, yet you lost money on the one you took and missed money on the one you skipped. This feels random. It feels unfair. But it's not random at all. What just happened is a perfect example of emotional interference disguised as decision-making. The hesitation on the first trade wasn't analysis, it was fear. The aggression on the second trade wasn't confidence, it was compensation. Your strategy didn't fail you. Your relationship with uncertainty did. And this is happening to traders thousands of times a day, in ways so subtle, they don't even recognize it as emotional interference. They think they're being logical. They think they're adapting to market conditions. What they're actually doing is reacting to internal discomfort by changing behavior in ways that slowly erode their edge. The breakthrough begins when you stop trying to eliminate discomfort and start learning how to function inside it. This sounds abstract, I know, but let me make it concrete. Every strategy operates on probabilities, which means losses are guaranteed. Drawdowns are guaranteed. Periods where nothing seems to work are guaranteed. The only variable in this equation is how you respond when these inevitable phases occur. Most traders respond emotionally before they respond logically. A loss doesn't just register as data, it registers as pain. A losing streak doesn't feel like statistics playing out, it feels like personal failure. A missed trade doesn't feel like patience, it feels like a mistake. These emotional interpretations distort your perception of reality, and distorted perception leads to distorted behavior. Here's where it gets tricky. The distortion doesn't announce itself. You don't wake up and think, "Today I'm going to sabotage myself emotionally." It happens gradually through tiny adjustments that seem reasonable in the moment. You size down because you're nervous. You skip a trade because something feels off. You close early because you want to lock in profit before it disappears. Each decision has a logical explanation attached to it, but underneath the logic is fear. Fear that you'll lose what you have. Fear that you'll miss out on what you could have. Fear that you're not good enough. And fear, when left unexamined, will destroy your consistency faster than any bad strategy ever could. The traders who break through without changing strategy go through a fundamental shift in how they measure success. They stop asking, "Did I make money today?" They start asking, "Did I execute correctly today? Did I follow my rules? Did I respect my risk parameters? Did I behave the same way after a win as I did after a loss?" This shift sounds small, but it changes everything. When your measure of success is tied to outcome, you're at the mercy of randomness. Markets can do anything in the short term. But when your measure of success is tied to process, you're in control of the only thing that actually matters, your behavior. Process is boring. That's exactly why it works. Think about how you feel after a winning trade versus a losing trade. Most traders feel validated after a win and defeated after a loss, even if both trades followed the exact same process. This is the trap. You're conditioning your nervous system to associate rule, following with outcome, rather than rule, following with integrity. Over time, your brain learns that following rules sometimes leads to pain, so it starts looking for ways to avoid that pain, which means abandoning rules when discomfort rises. This is how overtrading starts. This is how revenge trading starts. This is how you end up taking setups you know you shouldn't take and skipping setups you know you should take. Your conscious mind knows what to do, but your nervous system is running a different program, one designed to avoid pain in the short term, even if it guarantees failure in the long term. Breaking this pattern requires something most traders resist. You have to rewire your nervous system's definition of safety. Right now, Your nervous system feels safe when you're winning and unsafe when you're losing. This will never work in trading because losing is unavoidable. You need to reach a point where your nervous system feels safe when you're executing with discipline, regardless of outcome. That safety comes from repetition. Every single time you follow your rules and accept the result without interfering, you're making a deposit into your self-trust account. Every time you break your rules to feel better temporarily, you're making a withdrawal. Most traders are constantly overdrafting this account, then wondering why they don't feel confident. Here's a question that will reveal where you actually are in your development. Can you take a loss and immediately move into the next day with the exact same mindset you had before the loss occurred? Most traders can't. They carry emotional weight forward. They trade smaller after a loss because they're scared. They trade bigger after a win because they feel invincible. This emotional carryover is what creates the equity curve that looks like a heartbeat monitor, wild swings up and down, never stable, never smooth. Professional traders have equity curves that trend upward with manageable pullbacks. The difference isn't that they win more trades. The difference is that they don't let emotion create variability in their execution. There's a stage in every trader's development where effort stops producing progress. You're doing everything right on paper. You're journaling. You know your stats. You understand your edge. Yet results stay stuck in the same frustrating loop. This is the stage where most people quit, not because they stop trading, but because they stop believing. Internally, something breaks. They keep showing up, but hope replaces clarity. Force replaces patience. And they drift further away from the breakthrough they're actually closest to. This stage is so dangerous because it feels like failure when it's actually friction before transformation. You're not failing. You're being tested. The market is asking, are you serious about this, or are you just hoping for easy money? The real question at this stage isn't about strategy anymore. The question is, are you truly executing the same way every time, or are you adapting emotionally while pretending to stay systematic? This is one of the hardest mirrors to look into because it requires brutal honesty. Most traders underestimate how subtle emotional interference is. It doesn't always show up as panic. Sometimes it shows up as logic. You close early because price stalled. You skip the trade because the market felt weird. You size down because today didn't feel right. These sound like rational decisions, but they're not. They're emotional filters dressed up as analysis. The breakthrough happens when you shift from outcome awareness to behavior awareness. Instead of watching what the market is doing, you start watching what you're doing. Instead of monitoring profit and loss, you monitor discipline. Instead of tracking price constantly, you track your impulses. This is uncomfortable because it removes distraction. Many traders use charts to avoid feeling. When you slow down and focus on behavior, emotions become louder at first. This isn't regression. This is awareness. And awareness is the gate you must pass through to break through. Once you become aware of your impulses, patterns emerge. You realize you always interfere after 2 losses in a row, or after 1 big win, or when you're bored, or when you're tired, or when you want to prove something to yourself or someone else. These patterns were always there. You just didn't see them because you were focused on strategy instead of self. This is the moment where trading stops being about markets and starts being about mastery. Most traders avoid this stage because it feels personal. Strategy failure feels external. Behavioral failure feels internal. The ego resists that. But the traders who push through experience something powerful. They stop taking losses personally. A loss becomes data, not judgment. A drawdown becomes expected, not alarming. This emotional neutrality creates space. In that space, patience grows naturally. Real patience isn't forcing yourself to wait. Real patience is no longer feeling the urge to act prematurely. That urge disappears when trust is built, and trust doesn't come from winning. Trust comes from honoring your rules repeatedly regardless of outcome. This is why affirmations don't work in trading. You can't think your way into confidence. Confidence is earned through behavior. Every disciplined action is a deposit. Every undisciplined action is a withdrawal. Most traders expect confidence to arrive before they act with discipline. It doesn't work that way. Commitment comes before confidence, not after. There's a concept that very few traders understand until they've lived through it. Clarity comes after commitment, not before. You're waiting to feel certain before you commit fully. That day never comes. Certainty doesn't exist in trading. What does exist is clarity that emerges from committing to execute your edge, even when you feel unsure. Over time, your mind learns that uncertainty is survivable. That learning is what creates calm. Calm isn't the absence of fear. Calm is fear without reaction. You feel the discomfort and you execute anyway, not because you're forcing yourself, but because you've trained your nervous system to understand that following process is safer than following emotion. This is also the stage where traders realize discipline isn't about willpower. Discipline is about identity. When you see yourself as someone who follows rules, breaking them feels unnatural. You're no longer fighting yourself. Behavior aligns automatically. This is why copying someone else's strategy rarely works long term. Not because the strategy is bad, but because identity hasn't shifted. You can borrow rules, but you can't borrow discipline. Discipline is built through repeated self-respect. Every time you do what you said you would do, even when it's hard, you're building identity. Every time you abandon your plan to feel better temporarily, you're eroding it. Let me tell you what happens in the final stage, before real consistency shows up. It's quiet. There's no dramatic moment, no surge of confidence. In fact, most traders barely notice when it begins. But this is the line between struggling forever and finally becoming stable. Up until now, you've been fighting. Fighting fear, fighting impatience, fighting the urge to interfere. Now comes the hardest part. Surrender. Not surrender to the market. Surrender to the process. Most traders misunderstand this word. They think surrender means giving up control or becoming passive. In trading, surrender means something very specific. It means fully accepting uncertainty without trying to escape it through action. At this stage, you already know your edge works over time. You have proof. You have data. You've seen the strategy play out. Yet something still pulls at you during live execution. That pull is the last attachment. Attachment to outcome. Even disciplined traders often carry hidden expectations. They say they accept losses, but emotionally they still hope this trade will be the one. They still lean into winners mentally. They still brace during drawdowns. The final breakthrough happens when hope leaves the equation, not pessimism. Neutrality. Neutrality is the state where you place a trade with the same internal state you would have placing the next one, regardless of what happened before. No emotional stacking, no carryover. To get here, you must accept a truth that's uncomfortable to the ego. You don't control outcomes. You control execution only. Many traders understand this intellectually. Very few accept it emotionally. Emotional acceptance looks like this. You place a trade and feel nothing. No excitement. No fear. No anticipation. Just responsibility. Responsibility to execute correctly. Responsibility to manage risk. Responsibility to let the trade resolve without interference. This is when trading becomes boring, and boredom is the signal. When trading becomes boring, you're no longer emotionally invested in individual outcomes. You're invested in process integrity. Most traders chase excitement. Professionals eliminate it. This shift doesn't happen by force. It happens by repetition. Over time, you've followed rules through wins and losses. You've seen that nothing catastrophic happens when a loss is taken cleanly. You've seen that interfering does more damage than losing. Eventually, your nervous system learns safety. You can't think your way into consistency. Your nervous system must feel safe operating under uncertainty. Until then, emotions will override logic every single time. This is why traders who try to be disciplined fail. Discipline without safety feels like punishment. The mind rebels. But when your nervous system understands that losses are controllable, expected, and survivable, discipline becomes natural. At this final stage, you also release the need to recover losses quickly. You stop thinking in days or weeks. You think in series. A single trade is meaningless. A day is meaningless. A week is just a fragment. This long-term orientation changes everything. It removes urgency, and urgency is the enemy of precision. When urgency disappears, execution sharpens. Entries are cleaner. Stops are respected. Targets are allowed to play out. You're no longer trying to win. You're trying to execute well. Ironically, this is when winning becomes more frequent. Another major shift here is identity. Up until now, you may have still identified emotionally as someone trying to become consistent, trying to get there, trying to break through. At this stage, that identity dissolves. You stop seeing yourself as a learner chasing mastery and start seeing yourself as an operator executing a system. This subtle identity shift matters more than most realize. When you see yourself as someone trying to succeed, every trade becomes a test of worth. When you see yourself as an operator, trades are tasks, not judgments. Professionals don't seek validation from outcomes. This is why criticism, opinions, and market noise stop affecting them. They're no longer emotionally available for external influence. They trust their process more than opinions. They trust their rules more than instincts. They trust repetition more than prediction. You also become deeply selective about when you trade. You no longer trade to feel productive. You trade only when conditions align. This restraint protects emotional capital as much as financial capital. Emotional capital is rarely discussed, but it's just as important as money. Every time you force a trade, every time you overtrade, every time you chase, you're depleting emotional capital. When emotional capital runs low, decision quality collapses. Professional traders understand this. They protect their mental state as aggressively as they protect their account balance. There's also a shift in how you handle boredom. Many traders sabotage themselves simply because they can't sit with stillness. No trades feels unproductive. Waiting feels like wasted time. But boredom isn't an enemy. It's a test. The ability to do nothing is a professional skill. Most people never develop it. Professional traders are not active most of the time. They're selective. Selectivity requires restraint. Restraint requires emotional maturity. This is why traders who finally break through often trade less, not more. Less trades, less noise, less interference, more intention, more clarity, more consistency. At this level, you also stop comparing yourself to others. Comparison creates pressure. Pressure distorts execution. You realize that someone else's wins or losses have nothing to do with your process. You stop chasing performance and start respecting rhythm. Every strategy has a rhythm. When you rush it, you disrupt it. Breaking through without changing strategy is really about aligning your behavior with the natural rhythm of your edge. This chapter of the journey is quiet. There are no big wins to brag about. No dramatic breakthroughs to announce. But internally, something solid is forming. You begin to trust yourself more than the market. That's the real shift. Because once you trust yourself, you stop searching for certainty where it doesn't exist. You stop overthinking entries. You stop second-guessing exits. You stop fighting randomness. You execute. You accept. You repeat. And slowly, without force, results begin to reflect the edge that was always there. Not because the strategy changed, but because you finally did. This is how traders break through without changing strategy. They don't find something new. They become someone new. Someone who can handle uncertainty without collapsing. Someone who can lose without spiraling. Someone who can win without getting high. Someone who shows up the same way every single time. The market doesn't reward intelligence. It rewards consistency. And consistency is behavioral, not analytical. You already have what you need. The strategy works. The edge exists. What's been missing is you. The version of you that can execute cleanly under pressure. The version of you that doesn't interfere. The version of you that trusts process over outcome. That version doesn't appear by accident. It's built through repetition, through honesty, through facing discomfort without running. It's built in the quiet moments when no one's watching, when you follow your rules even though every fiber of your being wants to break them. That's where the breakthrough lies. Not in a new strategy. In a new you. And when that new version finally stabilizes, when discipline becomes identity, when patience becomes natural, when losses feel neutral, that's when everything changes. Not overnight. Not dramatically. But steadily, compound by compound, day by day, trade by trade. You stop resetting and start compounding. You stop searching and start executing. You stop hoping and start knowing. And the strategy you've had all along finally has room to work, because you're finally out of its way. That's the breakthrough. That's how it happens. Not by changing what you trade, but by changing how you show up every single time. And once you understand that, truly understand it at a level deeper than words, you'll never search for another strategy again. Because you'll realize the answer was never out there. It was always in here,